Good afternoon. Welcome to the Heritage Foundation and our Lewis Lehrman Auditorium. We, of course, welcome those who join us on our heritage.org website on this occasion, those listening on C-SPAN and who will be viewing it on C-SPAN in the future. For those in-house, we would ask that last courtesy check that our mobile devices have been silenced or turned off as we prepare to begin. And of course, for those watching online or watching in the future, you're welcome to send questions or comments at any time simply emailing speaker@heritage.org. Leading our discussion this afternoon and welcoming our special guest is James Wallner, Group Vice President for Research here at the Heritage Foundation. Prior to joining Heritage, he served as Executive Director of the Senate Steering Committee for 4 years. He previously served as a Legislative Director for Senator Pat Toomey of Pennsylvania and Senator Jeff Sessions of Alabama, as well as Legislative Assistant for Representative Terry Everett of Alabama. Please join me in welcoming James Wallner. James?
Good afternoon. On behalf of our President, Jim DeMint, welcome to the Heritage Foundation. It is my pleasure to introduce to you our guest today, Congressman Peter Roskam. Congressman Roskam is serving in his 6th term representing Illinois' 6th Congressional District. He is a graduate of the University of Illinois, and he earned a law degree from the Chicago-Kent College of Law at the Illinois Institute of Technology. The Congressman is a member of the House Ways and Means Committee, where he serves as chairman of the panel's Subcommittee on Tax Policy. We are fortunate to have the Congressman with us today because in this role, he will no doubt be playing an important role in the effort to develop, debate, and pass fundamental tax reform. In his remarks today, Congressman Roskam will discuss 3 main goals that should animate this work in the 115th Congress. That is, reform should fuel job creation and deliver opportunity for all Americans. It should simplify the tax code in order to make it fair and less burdensome. And finally, reform should refocus the Internal Revenue Service on its customers, the American people. It is my hope that members of the House and the Senate will follow the lead of our guest and join his work to develop and pass fundamental tax reform that is consistent with these goals. Ladies and gentlemen, please join me in welcoming our guest to the lectern, Congressman Peter Roskam. Congressman.
Thank you very much. Thank you. Well, it's great to be with you today, and thank you very much for the honor of spending some time at the Heritage Foundation. I'm joined by my wife, Elizabeth, and she was telling stories as we walked up here that 30 years ago when she came, they were serving Coors beer. I don't know if that changes, but it's not necessarily in the middle of the day, but we'll look for that later. So in 2015, I went to China. And if you're an American policymaker and you go to China, you get a bunch of briefings before you go, and people tell you how great China is. And they tell you about the infrastructure, they tell you about state-owned enterprises, they tell you all of these different things. And so I went to China, and I came back, and I came to a different conclusion. The conclusion I came to was, we've got challenges, and they've got troubles. So what are China's troubles quickly? Number one, they've got a demographic problem. Their one-child policy is out of sync. They've got too many boys who have been raised by 6 parents, 2 parents, 4 grandparents, and those of you who are fathers of sons, that doesn't end well, particularly when you've got a whole culture like that. They've got a corrupt military, we were told. It takes $100,000 to get 1 star in the Chinese military because these are largely commercial enterprises. They've bitten off more than they can chew in the South China Sea. They can't control the North Korean peninsula. The only thing worse than a unified peninsula from a Chinese point of view is the prospect of a nuclear peninsula with Kim Jong-un being so aggressive and acting with impunity. They're on the verge of a personality cult with President Xi. Their economic rights are out of sync with their political rights, and the pollution literally took my breath away. I couldn't even believe how incredible it was. So I flew back, and I landed in Chicagoland, and I'm at O'Hare Airport, and I'm having one of those Pope kiss the tarmac kind of moments. I came back and I thought, this place is great. I love this country, and we have so much opportunity here. It's simply amazing. Okay, so what's the nature of what we have going on, but what are the challenges that we have? Here's the nature of part of what we have going on. We've got an economic milieu that is innovative and dynamic and restless and aggressive. We have an economic culture in this country that is completely unique. If somebody tries something and fails, we don't characterize them as losers. We say, oh, how charming, how nice for you. You're in the 5th paragraph of your Fortune magazine feature story. We love the idea that somebody goes out and tries something, fails, tries something, fails, tries something, fails, and then ultimately succeeds. All of these things inure to our benefit. All right, but I said we've got a challenge. So what are some of our challenges? Well, we're here today to really talk about one of them, and that's our tax code. Our tax code is not working for us anymore. Our tax code was created in 1986, as we all know, and we've got an opportunity now to reflect back on that. And let me just sort of do a freeze frame discussion. The election in November, nationally, the Monday after the election in November, we came out to the House of Representatives, obviously, and I interacted with a number of Democratic colleagues. They were thunderstruck. Thunderstruck. They couldn't believe that they had lost the election to Donald Trump. They were thunderstruck, almost to the point of disorientation. Now, when something jarring like that happens to you, what's the smart thing to do? Reflect, contemplate, and move forward. In my opinion, nationally, Democrats are not reflecting. They're reacting. They're sort of doubling down. That's their problem. That's not our problem right now. But it is a word to us. In other words, it's what to avoid. We need to reflect on the fact that our tax code is not working for us anymore. My home state of Illinois is an example of avoidance behavior that gets completely out of control. So by avoiding one problem after another problem after another problem over a period of time, Illinois has fallen into this economic crisis that everybody here is familiar with. All right, let's not do that. Let's recognize the nature of the debate right now. Let's reflect on it, and let's look at it as an opportunity. So go back to 1986, and just to put this into context of how long ago 1986 was, the Bears won the Super Bowl. Ferris Bueller was out. Those are the happy things. Sadly, that was the year of the Chernobyl incident. That was the year of the Challenger disaster. So think about that. It's an incredibly long time ago, and yet that's the duration of our current tax code. What has happened in the past 30 years from an economic point of view? The entire digital economy, none of which existed essentially back in 1986. What else? The global nature of the economy has fundamentally shifted all the way around. There was obviously trade and a global economy before, but there has been a fundamental shift in terms of integration all across the spectrum. So now we've got to reflect back and say, this is our time. Now, I am absolutely convinced that we are at a national inflection point as it relates to tax reform. We are at a national inflection point. What do I mean by that? I think that there's 3 key things that are driving this. First is, there's nobody that is defending the status quo. Nobody. There is no voice, no person, no entity out there today that's saying, you know what, the U.S. tax code's great, just leave it alone. Nobody. Now, there's people, obviously, that like some elements of the tax code, clearly, but nobody in its entirety is communicating that they like it the way it is. What are some of the things that they don't like about it? They don't like the complexity. So think about this. I have an expectation and a desire for simplicity that rivals all of your desire for simplicity. You can act like you're above me, you're not. We're all in this together. We want simple, quick, easy, fast things. So think about this. I have an expectation, not a hope. I have an expectation that I can go on my iPhone, I can click on my airlines app, using 2 thumbs, by the way. I can click on a flight, a seat, an e-ticket, and get a boarding pass sent to me on this device within the twinkling of an eye. I expect that. I desire that level of simplicity. I don't want to be on the phone with a travel agent. I don't want to wait on an 800 number. You take my point. We have a real interest in simplicity. So the fact that nobody is defending the status quo is significant, and simplicity is part of that. The other thing, second reason that I think we're at a national inflection point is the fact that the shine is completely off the penny of the Internal Revenue Service. I mean, completely off the penny. Not just competency issues, but the malevolence of the targeting, and then the things that were happening with civil asset forfeitures in particular. Let me just take you back to a story from the last Congress, because it's poignant, and it drives the debate about the enforcement agency. There was a couple named Mr. and Mrs. Sowers, dairy farmers from Maryland, and they got into the farmers market business, which is a cash business. They started making deposits of cash, and they were told by their bank teller, hey, it's a big hassle when you come in here with cash, because when you do, we've got to make a report to the federal government. Would you mind just not coming up with $10,000 at a time, because that's the threshold? Would you mind coming in with less money? Mr. and Mrs. Sowers, nicest couple ever, said, sure. Well, upon reflection, that was a bad idea, because that's a felony. That's called structuring. They were structuring their deposits so as to avoid a reporting requirement. To collapse this story down in the interest of time, the IRS got wind of this and essentially went in and shut down Mr. and Mrs. Sowers' operation. They did a civil asset forfeiture, the likes of which stuck them in the midst of a Kafka novel. They could not figure out what was going on. They go to the bank says, you can't do anything, your deposits are being seized by the Internal Revenue Service, and you can imagine how this goes, and they were really, really flummoxed. Over a period of time, interestingly, on a bipartisan basis, we were able to get the Commissioner of the Internal Revenue Service to issue a public apology, which was like birthing a calf, by the way, in terms of getting that done. And we've been able to change some of the statutes and some of the rules, and we've been able to return some of this money to similarly situated people. But you take my point. You've got the enforcement agency of the tax code, who 20 years ago, quarter century ago, may have enjoyed a reputation of tough but fair. Pay your taxes, don't mess around with those guys, and everything's okay. They don't have that reputation today, and as a result, I think that's driving part of the national inflection point on tax reform. And then the third reason I think we're at a national inflection point is these inversions are going to be continuing to happen. The base erosion of the U.S. economy is really, really significant. And for us to sit back and basically wring our hands and get fretful and anxious about it and not come up with an action plan is really foolish, in my view. And it's not as if there haven't been attempts on both sides of the aisle to get this done. The House Republicans, we worked in the last Congress coming up with base erosion rules. You're familiar with some of these patent boxes and earnings strippings and this, that, and the other thing, none of which we could really turn the crank on to make them particularly satisfying. The administration, the Obama administration, came up with their approach, which was really, really concerning, these 385 regulations, recharacterizing debt and equity, upsetting 40 years of Treasury doctrine, so to speak, and rulemaking. And that's not going to be particularly nimble. And I think the analogy that I came up with, it's pretty simple. It's like, look, we are trying to fix this leaky basement, and we're patching here, and we're patching there, and we're patching there. And then finally, it just dawns upon you, we've got to fill the whole thing in, change the dynamic entirely. You've got to move away from this model entirely. And I think that's really where we are. So some of these inversions, Johnson Controls leaving Wisconsin, going to Ireland. Eris International leaving Georgia, going to the UK. Restaurant brands, Burger King going from Florida to Canada. Horizon Pharma in Illinois, going to Ireland. Aon leaving Illinois and going to the UK. Interestingly, in many of these cases, these are companies that are going where? They're not necessarily going to a, quote, tax haven. These are companies that are going to places, going to close allies and close friends in our commercial architecture, so to speak. So what we've got to do is say, how is it that we make this a more attractive jurisdiction? I had the chance a couple of years ago to meet Natan Sharansky. Now stick with me. It's like a Seinfeld episode. It'll all come together here. I met with Natan Sharansky on a trip to Jerusalem, obviously. Natan Sharansky, if you don't know him, he was one of the Jewish refuseniks in the Soviet era, spent 9 years, I think, in the Gulag. And I had heard a story that had been attributed to him, and during the course of this breakfast, I wanted to ask him, tell me, is this story true? Here is what I heard. I heard that when he was a refusenik, he heard of Ronald Reagan's speech. He's in the Gulag, and he hears Ronald Reagan's speech where he calls out the Soviet Union as the evil empire. And the story I heard was it had a profound impact on him and everybody in the Gulag, both prisoners and guards alike. Why? Because the notion that the American president was calling something what it was basically for them a foreshadowing of the beginning of the end. When there was clarity about what was being discussed, it had a profound impact. He confirmed that story, and he said, interestingly, he goes, Congressman, the story's even better than that. When I had a visit with President Reagan in the Oval Office, he described this, and he told President Reagan this. At that point, Reagan apparently called in his staff because he wanted his staff to hear this from Sharansky, probably the staffers that told him, don't put it in the speech, it's too controversial. So where are we? This is the value of naming things. This is the value of reflecting, and this is the value of recognizing where we are. We've got a tax code that doesn't work. We have an inversion problem that is going to continue, and it will exacerbate itself, notwithstanding all these attempts to try and mitigate against it. And so now here we come, and we've got a blueprint. And I would argue that we have essentially a collapsing window of opportunity right now to get this done. And you've got a Speaker of the House in Paul Ryan who is going to create as much legislative space as possible. He would actually rather be chairman of the Ways and Means Committee, let's be honest. And toward that end, he's going to create as much space and as much opportunity as is entirely possible. Tax reform, however, is not for the faint of heart. So when I first got on the committee, I called James Baker of James Baker fame because, everyone's talking about tax reform, and I thought I'm going to call the one person who was in the middle of it all, James Baker. So he gets on the phone with me, and he was very generous with his time and incredibly insightful and had stories and anecdotes and perspectives. But at the end of the phone call, he said something that I haven't forgotten. He said, Peter, remember, this was Ronald Reagan's #1 domestic priority in his second term. He used everything he had as Ronald Reagan. He used every tool he had at the White House. He used every tool at the Treasury Department. We had bipartisan, bicameral, powerful advocates and sponsors on Capitol Hill, and it collapsed 3 times and almost didn't happen. Whoop, gotta run, see ya, click. So, when I say this is not for the faint of heart, this is not for the faint of heart. So the ebb and flow of this discussion is going to continue, and we'll hear stories about so-and-so says this today, so-and-so says that today, but the name of the game in terms of framing this up is to recognize that the status quo is simply unsustainable. So you're familiar with the blueprint, you're familiar with this document, and it's a proposal, and it's essentially an invitation all across the country for people to engage. And one of the things that we learned from the passage of the Affordable Care Act is how not to do this. If people feel jammed, if they feel like nobody's listening, if they feel like they don't have an opportunity to get their word in or to express themselves, then the system, the process will actually seize up and it will collapse in on itself. But similarly, you can talk yourself to death. You can contemplate yourself to death. And you can also create an environment where decisions are not made. So I am really pleased at the pace with which Chairman Brady has been moving things. The blueprint was articulated in July. It gained a great deal of momentum beginning in November, obviously, with the election. And then moving forward, it's been the point of a focal point of conversation, not just at our retreat, but obviously with the Trump administration and particularly with the public at large. I represent suburban Chicago. In suburban Chicago, there are any number of first, second, third generation companies that are small subchapter S manufacturing companies. And one of the things that I have heard time and time and time again from them is the difficulty that they have from an international point of view. And this is where the blueprint is trying to speak directly to that. So we have all stipulated that we want to enhance a manufacturing base in this country. We've all recognized that we need this to be revenue neutral. Over the course of the past 6 years, with the budgets that the House has passed, we have publicly debated and litigated and persuaded the country that debt is a serious issue, and $20 trillion of debt is a serious issue. We've tried to come at this in a fresh way by shedding ourselves from just the static scoring that defies logic, but instead have said, let's look at this on a dynamic basis to make sure that we get a real world evaluation. And it's our burden to make sure that that is a real world evaluation and that it's not just pixie dust that's thrown out there. But the idea is create a revenue neutral, pro-growth, simplified tax code. And my prediction is this, that the more people look at different alternatives, the more they explore things, the more they chew on different choices, I think they'll come down and say the elements and the architecture and the structure of the blueprint is the best way to go. So the backstory quickly on border adjustability is something that we really need to focus in on. As we all know, largely every other economy in the world has adjusted their borders. And it came to my attention a couple of weeks ago that when border adjustability was first allowed on the global trading scene as it relates to VATs in particular, VATs were fairly de minimis. But what's happened? Over a period of time, like a lot of other tax liabilities, the VAT has grown. And so the adjustment then, which is a disadvantage to us, has grown as well. So as we know, the United States is the only country of significance that has a double tax, essentially. On the one hand, we tax, and the cost of a manufactured good in the United States is cooked into the income tax, and then it's also taxed as it goes into a foreign jurisdiction. And by contrast, the foreign jurisdiction they have their tax removed, and it's not taxed when it comes in here. So these things are all, when you're the biggest, strongest economy in the world, you can endure a lot of pain and missteps. And I think that we've been able to endure those things in the past and basically muscle through them. But I'm telling you, those days are gone. And what we need to do is heed these signals. These companies that are leaving, they're not leaving based on a natural disaster. This is not as if there's a hurricane. This is not as if it's a flood. It's not as if it's a catastrophe that can't be mitigated. These are all rules that have been created, and if they are rules that have been created, they are rules that can be recreated. So let me just close by making one point, and that's this. There is a disposition and I think an attitude that we need to embody. And one of the saints of one of the church fathers of the 4th century, I think, was St. Ambrose. And in the context of his faith, he has attributed this theme. He said, we don't impose on the world, we propose a more excellent way. We don't impose, we propose a more excellent way. And so I think the blueprint is a proposal. The blueprint is a concept that says, let's recognize that the status quo is not working for us. Let's recognize that we need to move. We need to move quickly, but we don't want to trip all over ourselves. But by the same token, we need to make some decisions. And so I'm very upbeat about this. I think that there is a real opportunity for us to move forward on this. And I think a year from now, we're going to be celebrating this Tax Reform Act, and we're most importantly going to be celebrating the type of growth that Americans are really, really hungry for. So thank you very much, and I'd be happy to try and answer easy questions that make me look good. No. Happy to try and respond to anything. Thank you very much. Questions? Yes, sir.
Congressman, my name is Howard Segermark, American Business Defense Council. Those 2 and 3 and 4 generation businesses in your district are hit also by the death tax, and which destroys jobs, malallocates capital. Will that repeal be in the tax bill?
Yes, sir. That is one of the thresholds. One of the absolute foundations is the repeal of the death tax. Yes, sir.
Congressman Autry Pruitt from American for Fair Taxation. You mentioned in the beginning of your speech, you're talking about structuring, and how that's a crime. Are you telling us that Congress actually is going to address the criminal code that governs how people actually make deposits within an income tax bill?
No.
Because that to me is two separate issues.
They are two separate issues. I agree with you. So there's a separate piece of legislation that we moved through the House, got close in the Senate, that would deal with the structuring issue as it relates to the Internal Revenue Code. That would not be part of tax reform. I'll be advocating for that, and I'll be reintroducing it. But your point is, these are two separate things. The reason that I brought it to everyone's attention was that the nature of the application of that statute was too aggressive. I told the IRS officials when we were having a hearing on this and in subsequent private conversations, I told him, I said, you're like Inspector Javert in Les Mis. I said, you're the guy nobody likes. What are you doing? And so we want to limit Inspector Javert's ability to, we want Jean Valjean. You know what I'm saying? All right. Yeah, question.
Congressman, thanks for your talk. I'm wondering specifically on the border adjustability, the lessons from Jim Baker about how this town divides into factions. And, working for a manufacturing company who's based in the United States, we look at this and see there's great opportunity to finally this be the best place to serve our customers. What do you think about the other factions in the city who are looking at border adjustability and are concerned about, we overly rely on imports or others? How is that going to be resolved?
I had a discussion with the CEO of one of the companies that's concerned about this, and he laid out a number of his concerns. And I said, nobody wants those terrible things to happen. So let's move forward on this basis. First of all, we think that the currencies are going to adjust, and you're familiar with that. It's interesting, some of the original opponents said currencies are never going to adjust. Now they've shifted, some of those folks, and they say we're concerned about the timing of currency adjustments. Okay, that's different. That's good. So let us work with you on transition rules. But I kind of turned the discussion back on the executive, and I said, how is it now that we have a tax code that puts you in a situation where so many of your suppliers are overseas? Let's fix that. And so help us in terms of transition, help us in terms of understanding the nature of the contracts that you have, and work with the committee to give us the type of input so that we can get, so that you have stronger, more robust and dynamic supply lines. So I think that, he didn't walk away and say, oh, Peter, great, I'm all for you. But in terms of our disposition and our attitude, we want to be having significant input from retailers in particular, from those who are, others who have expressed concerns, because I am of the view that the more open we are to try and mitigate their situations, and them understanding, I understand that a CEO needs to be thinking in terms of, a public CEO needs to be thinking in terms of 13 quarters, or 13 weeks. So every 13 weeks, he's got to be answering to Wall Street, he's got to be answering to boards, he's got to be answering to outside groups and shareholder price. We think we can help with that. But that said, you want your policymakers to be thinking beyond 13 weeks. You want your policymakers to recognize generational shifts. and generational opportunities. And I think that's the obligation that we have. We think that we can mitigate, we think that we can help, and but you actually want us to be thinking much further out than 1 quarter at a time. Yes, sir.
While we're on the subject of the border tax and the thinking beyond 13 weeks, I think a lot of the uncertainty and the nerves around wherever you fall in this issue comes from sort of the uncertainty of the time frame. You just said that a year from now we'll all be celebrating the great success of this tax reform, and the speaker has said he wants to get this going by August. But you know, when will this be going to the JCT for analysis? When will Ways and Means be marking this up? And when does the House hope to pass it and send it to the other branches of government?
Okay, so I won't give you a straight answer on any of that, but let me duck and weave. You ready? So think about this, and the best response I can give you is to try and give you a characterization of the ebb and the flow of the timing. So you got a blueprint that gets published in the summertime, last summer, and then it's gotten a lot of attention, obviously, since the election. Then what Chairman Brady has been doing is gathering members together to say, all right, we really need to be thinking through the retirement piece of this. We need to be thinking through the education piece of this. We need to be thinking through pass-throughs. We need to be thinking through all of these subsequent issues. And I'll tell you, I've been very, very encouraged by the caliber of that discussion, because I've been in a number of these discussions. The fact that our members are well-informed and have opinions, they're willing to share those opinions, and then it's a matter of trying to winnow these things down. Then some of these things will be drafted by staff, given to joint tax. We will get the feedback, and all of a sudden we may say, "Oh, we didn't know that was the implication of that." Do you follow me? So there is a give and take here that's healthy and dynamic, and that Chairman Brady is doing an incredibly great job of trying to get everybody involved in this. Yes, ma'am.
Hi, thank you for taking my question. So going to healthcare a little bit in terms of tax reform, the big healthcare tax that's being looked at for reform is capping the exclusion on employer-sponsored insurance. So how does capping ESI kind of fit into your overall plan or vision for fixing the leaky basement?
So all of these things, they interact and they're not mutually exclusive. So if you go that route, then you've got a series of choices that comes out. If you don't go that route, then you begin to say, well, how is it that you have a restraining influence on the cost of health insurance in particular? So the health insurance debate is happening at the same time. It's contemporaneous with the tax reform debate. They interact and they touch at some points and they separate at others. But those are the types of things that you don't want to necessarily do in a vacuum, and you want to make sure that you have a clear understanding all the way around, and particularly what are the other cost pressures in terms of the price of employer-based coverage. Yes, sir.
Thank you, Congressman. You said keep it simple, so I'm going to try and keep this as short as possible. But with one of the pillars of pro-growth tax reform as simplicity, do you have any current plans about a business equivalency rate? So like pass-throughs and C-corps, ensuring that they're taxed at like the same rate, just in terms of just simplicity in general.
So here's what we've proposed, and there's the nature of your question. You're sensitive to this. So there's been a lot of discussion in the past few years about, hey, do corporate tax reform and then come back and deal with individuals and the pass-throughs later. That is completely unsatisfying for a lot of obvious reasons. And so instead, what we've proposed is to say, look, let's lower the C-corp rate down to 20%, what we've proposed, and then for the first time, move down the business rate of the pass-throughs to 25%. So you would move both down at the same proportion, so it's not as if there's a disadvantage there. And then what we've got to think through, and this is the job of the committee, what's the safe harbor for the pass-through entity about what is business income? Because you can imagine there will be a lot of pressure to move it over into the 25% rate as opposed to the 33% rate. So we don't want to leave that decision in the hands of the IRS, who I just so roundly criticized 5 minutes ago. But by the same, and at the same time, we need to create a clear rule, clear definitions, and so forth. And that's just good, hard work of us trying to put that together. And then with that proposal, open that up for discussion. But we're still very much in the mode of trying to come up with those definitions that then we could propose and get feedback on. All right, this is, okay, yes, sir.
Chairman Camp, in his proposal in 2014, included a bank tax as a way to drive revenue. I'm just wondering, that's not part of your plan, or not at all? Just wondering what the possibility of
No,
would be that.
zero possibility in my view. So here's the interesting thing. Dave Camp did a good job of driving the discussion on tax reform, and we learned a lot of things from the Camp draft. It was a very arduous exercise, but there were two self-imposed limitations that bound the Camp draft discussion. One was, revenue neutrality based on a static basis. So we did all of these things and, all of these proposed changes and discussion points. And then there was the distributional neutrality. And those two things, what you found at the end was it created something and people went, where's the oomph? Where's the big growth charge? Where is the 4% or whatever? And you just couldn't get there, or we couldn't get there. So we've built on that knowledge, which is why we made the decision to move towards dynamic scoring to say, okay, let's look at this in a real life context. Let's make sure that it makes sense, that it's modeled and so forth, so that it's robust. But the drive for the bank tax discussion was essentially driving just towards revenue, and there was not necessarily an underlying philosophy behind it, and so there's not an interest in going that route. Yes.
I do have one question, just as a total opinion, handicap, whatever. What do you think WTO is going to do with the way the border adjustable part is?
Look, so here's the way I think it gets framed up. It's not a there's a three-part test. WTO has a three-part test essentially. One is it a financial contribution to a business? No, it's not. Second is it a national preference? No, it's not. Third is it an export subsidy? Well, if taking the VAT off is not an export subsidy, how is taking our tax off an export subsidy? Now, I realize that's easy for me to say here at a podium, and it's an entirely different thing for that to be discussed in the WTO. But there is a threshold fairness issue here that would suggest to me we basically we're moving towards a consumption tax. We are mirroring essentially what the rest of the world is doing, and we're essentially saying we are asserting a right to be treated in the same fashion as the rest of the world is. And we think that we have that right, and we think that when it all comes down to it, we'll be exonerated on that. So, well, listen, I want to thank the Heritage Foundation very much just for the opportunity to be here, and I look forward to our paths crossing. Let me tell you one other quick story in closing. I had an old Sunday school teacher who I went to lunch with. This is about 15 years ago. And he's a really wealthy guy, very, very successful guy. And during the course of the lunch, I asked him a question. I said, what's it like to be that rich? I said, I'm willing to learn, but what's it like to be that rich? I said, don't you feel like everybody who is approaching you is just manipulating you and hustling you and all that sort of thing? And doesn't it just feel bad? And he said something to me that day that was formative for me. Formative. It shaped me. And this is what he said. He said, Peter, I choose not to be cynical. He said, guard your heart against cynicism. He said, if they're manipulating me, that's their problem. That's not my problem. He said, nothing good comes from a cynical heart. Now, I know that I am in this zip code, which is the heart of cynicism. And yet there is a buoyancy, I think. I think there is an incredible opportunity for us to have a transformational moment as a country as it relates to this tax code. So I would just encourage you to look at this inflection point and to be thinking about what these possibilities are. And I think that there's a real brightness. And thank you to the Heritage Foundation for this fine forum this afternoon. Thank you.